Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast, a video edition, so make sure you tune in to Spotify or YouTube to check out the video version. The other day, we talked about boredom in trading and how, believe it or not, the most successful traders of all time actually embrace the boredom. They enjoy the slow, methodical process of digging through charts and waiting for the right opportunities. Well, today we're going to do a complete 180. You can't hear me. 180. Because today we are going to talk about the exact opposite of boredom, and that is going to be scalping, which is pretty much the polar opposite. In today's episode, we're going to break down a few things. We're going to talk about what scalping actually is. We're going to talk about both the mental and technical skills needed to do it successfully. And lastly, towards the end of the episode, so make sure you hang on to the very end, I'm going to give you a few questions that you can ask yourself to determine whether you actually have what it takes to be a scalper or not. And real quick, for you guys that have been following me for a while and you kind of heard me talk about scalping before, I'm taking a little bit of a different approach to this episode. Instead of just telling you why you shouldn't do it, I want to focus on the positive and talk about what you need if you want to do it. Now, before we hop in, I do want to update the poll questions because I always say that I will and I never do. So let's do that very quickly. For the question of what chart background do you favor, black, white, gray, or other, 70% came in black. That is the winner. 20% white, 8% gray, and 3% other. Can you be considered a successful trader even if it isn't your main source of income? Very happy with this response. 81% of you said yes, 19% of you said no. There was a comment as well that I put in the list of doing a podcast about, but not sure if I will get to it or not. Next was a good game of Would You Rather. Trade one strategy on multiple assets, trade multiple strategies on one asset, trade one strategy on one asset, or multiple strategies on multiple assets. There we go. 42% said trade one strategy on multiple assets. 26% said multiple strategies on multiple assets. 21% said trade one strategy on a single asset. And 12% said trade multiple strategies on only one asset. Almost done, just a few more. The next was what type of trader or investor are you or would you like to become? 66% said I want to trade and invest, do both. I think that's a really good answer, financial diversification. 28% said short-term trading only, and 6% said long-term investing only, which was a little bit surprising, but my guess is a lot of those long-term investors probably fall into that trade and invest category as well. And then the last one, I believe, not counting the scalping one I did today, maybe I'll share that at the end of this episode. With the US versus Iran conflict escalating, where do your eyes venture to first? 49% said gold and silver, 34% said oil, 11% said defense stocks or ETFs, and 7% said energy stocks or ETF. All right, so back to our originally scheduled program, and let's start with the very basics. What is scalping? To put it simply, as small-brained Akil likes to do, scalping is a very short-term trading strategy where traders take a high frequency of trades, so a lot of trades, and they stay in those trades for a very short period of time. If you remember back in the previous episode where we talked about trading time frames and we broke things down like this, where your long-term investors are looking at, holding positions for months to years. Your swing traders are typically looking to hold positions from days to weeks. Your intraday traders are looking to hold positions from maybe hours to days. Your day traders are looking to hold positions from minutes to hours. Well, if we were to add scalping to that list, I would say it would be from seconds to minutes, just to give yourself some perspective. Yes, that means that scalpers are sometimes in and out of trades faster than it takes for you to click that like button. Click that like button. Subtle hint if you haven't done it already. Or, in other words, scalping is like day trading on crack. Crazy, I know. Now, this may be an obvious question, but where do scalpers trade? Well, because they're moving so quickly in and out of the markets, scalpers prefer the lower time frames. And I'm talking about the lower time frames. Some of the unmentionables that we usually don't mention on this channel. I'm talking things like Ooh, the minute chart, even though we had a great trading opportunity on the minute chart today, which hopefully I put out before this video on the Euro New Zealand if you haven't seen it already. But we're talking about the minute chart, we're talking about tick charts, we're talking about range bar charts. Now, personally speaking, again, despite that great opportunity we saw in the minute chart today, which ruins my point, once you get below the 5-minute time frame, my preference is to go to something like a range bar chart or a tick chart. In my opinion, I think they just give you a cleaner look at price action, especially if there's like a high impact news event. You don't get sort of the wacky movement. You can kind of see the natural flow and rhythm and less noise than the time-based charts. But that's just my opinion. And as always with trading, you got to feel out and decide what works best for you. So if you couldn't tell already, scalping is rather unique and it does attract a very specific type of trader. It's not for the faint of heart. It's not for the trader that is the patient planner that likes to kind of work everything out while stuff is going on. It's certainly not the long-term thinker, the slow decision maker. Scalping attracts people who love fast decisions and people who love, or at least can deal with, immediate feedback. And as the great Liam Neeson said in that show where someone hurt a family member and he has to get revenge, which is sort of most of his movies nowadays, if you want to be a scalper, it takes a very particular set of skills. That was a horrible impression, but you get what I'm saying. Now, in explaining it like that, we made scalping seem fun, and fun usually attracts the gambler, which isn't necessarily good for trading, right? The opposite of the conversation we had the other day about boredom, where people like action gets people into trouble is bad for your trading. Professional traders tend to like less action, more boredom, less mistakes. That's good for your trading. I'm not saying one is better or worse, but I think it's just important to understand that scalping is a double-edged sword. So yes, as a scalper, you are making fast decisions, and of course you need the ability to make fast decisions, but fast decisions and fast feedback also comes with fast consequences. And if you're not able to handle those fast consequences, like mentally, it's going to be very challenging to consistently take signal after signal after signal while dealing with all that feedback at the same time. One of the hardest parts of trading is dealing with those emotional battles, whether it's a win or loss, the excitement, the happiness, the overconfidence that comes with winning, the depression, the anxiety, the feeling of badness that comes with losing. This is hard enough for any trader to deal with, and I've given you guys some tactics like, hey, step away from your computer after a loss. One of my key moments in trading, a story that you guys always love, is the playlist, Akil, right? Where back in the day where I would create a playlist, right? It was like 2 or 3 songs for win, big win, loss, big loss. And after every trade, I would play those 2 or 3 songs. I would dance around my room, I'd air guitar it, whatever like that. But then my rule was after those songs were over, I had to erase the memory of what happened before and I had to refocus on the next trade. Now, this was easy to do as an intraday trader because, 6 minutes out of my day, there's nothing happening in the market in 6 minutes, so I can easily step away from my computer and be right back. As a scalper, however, with the frequency of trades coming bang, 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 back to back to back to back to back, you don't necessarily have that time to step back, decompress, refocus. You've got to be able to move on right away, which is extremely difficult. You can think about it like this, because oddly we still have snow outside for some reason, but as a scalper, you're getting hit with psychological snowballs, one after the other, and you've got to sit there and take it while taking the next trade. And again, when it comes to scalping, because you're usually operating with an extremely small edge, where that edge pays off more based off the frequency of trades you take versus the actual risk reward of the given trade, you can't really afford to make a mistake. And knowing that you have to be near perfect as a scalper, well, that just adds even more pressure to the pressure that you're already dealing with. Now, another problem that scalpers have is ego, right? This is another double-edged sword, as most things in trading is, but ego is very difficult, right? On one hand, this hand, you have to have a lot of confidence. You got to have a lot of confidence in general to be a trader. You got to have even more confidence to be a scalper in that fast-paced environment. You have to trust your system. You have to follow your rules. You have to do all of that without hesitation, right? You have to be a trading robot. But on the other hand, you can't have too much of an ego about predicting the market, meaning you can't let your ego of what you think is going to happen in the market get in the way of what your signal says, because you may have a long-term bias on oil where it's like, man, oil is long, I got to get long, blah 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 blah. But if the chart, and more importantly your signal, is saying short, you've got to erase that long-term bias and you've got to only trade what your strategy and what your edge tells you to trade. And that's easier said than done. And again, just to put this in perspective, remember, scalpers are operating on very low time frames. So those signals and that movement is coming like that. You don't really have time to debate with yourself whether you think, oh, this should go up, this should go down. All that matters is the execution of your signal, right? Your job isn't to be right necessarily. And I know that sounds weird because you would think as traders, our job is to be right. But our job is to execute the process with 100% accuracy, believing and knowing that if we do so, we're going to be right, aka profitable in the long term. Now, with scalping occurring on such a high time frame with such a high speed, it's important that you have a system that can handle that type of speed, right? Or can operate at the speed that you need. And I'm not just talking about your trading strategy, I'm talking about your literal computer system. We had a good conversation in the live room this morning, again, randomly on a minute chart, looking for a trading opportunity. And well, I got asked another question and then I answered it. And 4 minutes later, the market had already pulled back and expanded again. And we got into the conversation where one of our traders said, hey, if you're going to be working on these type of time frames, like, you got to have a top-notch machine. You can't have lagging data because you're going to be late to the party. I actually dealt with this earlier on in my trading career where I thought I was developing a scalping system on a range bar chart, and it worked all good in like the testing and whatever like that. But in real life, because my system lagged a little bit, I was always late to the party, and believe it or not, but being a little bit late completely crushed my edge. And it took something that was a profitable strategy to a break-even strategy. Now, real quick, shameless plug alert, because this is a perfect segue into it. If you're curious about what type of machine you might need for trading, whether you're a scalper, or whether you're a swing trader, or whether you're an investor, it doesn't matter. There's a great free trading computer builders or buyers guide from my buddy Eddie Z. Now, Eddie Z, he's just not a tech guy. He was actually a trader, right? Back in the golden days, on the pit, on the floor, doing real trader stuff. So he knows how to build machines that are meant to do what we need to do. Personally, I had both of my machines built by him, one like 12 years ago, the other one I think 3 years ago now, and I've been nothing but impressed. I wouldn't have gone back if I wasn't impressed. So anyway, if you need help in deciding what type of machine you need to build or need to buy, or just want information on what's all included in a trading computer, check out the link in the description below or scan the QR code on your screen right now. It's a free guide. Educate yourself. There's no downside to it. This is what we would call in the trading industry a risk-free trade. Now, going back to the scalping and the conversation we had in the live room today after we spoke about, the need to be locked into your chart if you're trading on a lower time frame, mental fatigue is real. I know we all get into trading and we all say, oh, that will never be me. I can do this, I can do that. Well, you don't actually know until you actually do it. And trust me when I say scalping is exhausting. Again, I've never scalped for a long period of time, but I was a day trader for a good 8 years of my trading career, and that was very exhausting. And remember, scalping is day trading on crack, so it would be even more exhausting. So if you're going to scalp, I would highly recommend that you limit your screen time, right? I'm not giving advice, of course, right? No financial advice, just sharing my thoughts. But to be honest with you, if I were scalping, I would probably limit myself to about an hour per session. I know that seems crazy, but back when I day traded, my day trading hours, I started with like a 4-hour day trading day when I was kind of young and wild. It got reduced to 3 hours, and that was kind of my sweet spot, 3 hours. And that's on the 15 5-minute chart, something like that. Remember, scalping is day trading on crack, right? So 3 hours a day in front of a minute chart is going to be very mentally exhausting. I would honestly do about an hour. And I know what you're saying, Akil, like, what the hell am I going to do in an hour? That's not a lot of time. But remember, if you're on a 1-minute chart or a 1-minute chart equivalent, that's still going to be 60 candles, right? 60 candles, if you're looking at a few pairs, that is plenty of opportunity to do whatever you need to do. If you start stretching that out to 2 hours or 3 hours, especially without break, that's just a lot of time spent paying very deliberate, focused attention. Everyone is different, but my guess is that your attention span is going to drop. You're going to get distracted. You're going to become messy and sloppy. And again, scalpers can't afford to make mistakes, so you need to be sharp. Now, speaking of sharpness, another thing that you could do and probably should do as a scalper is have a shutoff, meaning know when to shut down. And this is a challenge for many reasons. I'll probably touch on a few of them, but one is going to be pride, right? Pride and that overconfidence of like, hey, I can do anything, I'll never be defeated. That can allow us to push through things like fatigue. You can be clearly losing focus in something, but if you have that I've got to do it attitude, you're going to lie to yourself and say that you can, even when you shouldn't. Now, in real life, I'm all for this. I'm a competitor myself, so I'm like, hey, mentality, always go for it. But from a physical perspective, if you're at risk of injury, you never want to push. That's what I tell the athletes I work. In a trading perspective, if you're putting yourself at a greater chance of losing money, well, that's just dumb. And you got to find that separation point between being prideful and just being dumb. And when it comes to trading, the hardest part is that what's lying to us is really our emotions, right? They kind of make us and bait us to either staying in the market too long or getting out of the market too early, right? Let's say we had a big winning streak, right? Two things can happen. One, we can get greedy and we want more, we want more, we want more. So even though we're feeling fatigued, this is our big day, right? And we got to stay into it. So we got to stay in it so we can maximize it. On the other hand, maybe we're fearful. Maybe we had this big day, but we're feeling good. But all of a sudden you're like, I don't want to give back these profits. The first 30 minutes was great. And then you say, oh, I'm mentally fatigued, I'm tired, and you bail too soon, and you miss the trading opportunities that could end up making your big day that big day. So it's important to understand that there's a difference between our actual physical and emotional fatigue versus the physical and emotional fatigue that comes with our profits and losses, right? Our decisions shouldn't be made necessarily off of our, how we're doing for the day. It should be an honest kind of reflection on how we're feeling. Now, the natural comment that comes with that is, Akil, well, what about kind of specific shutoff requirements? Meaning like, if I have this many wins in a row, or if I make this much, then I shut down. Or if I take this many losses in a row, or if I lose this much, I shut down. So personally, I'm not a big fan of that. And that's because I tend to think in probabilities and edges. So just because I have 3 losses in a row, that doesn't necessarily affect the next trade. If anything, right, I always expect to revert to the mean. So if I lose 3 trades in a row, that next trade, that 4th trade, has a greater probability of being a winner. Now, again, it's all case-by-case scenario, and with scalping, your sample size is so small, there's so much frequency in it. But the point is, I know that my strategy has an edge, and my edge comes from executing every single trade, not picking and choosing what trade to take and what trade to bail on. So I never want to purposely not take a good trading opportunity. With that being said, for many of you guys that have those rules, let's say you're working for a prop firm and they have very specific rules where it says, hey, you can't lose this much a day, or you can't have this many losers in a day, or you have to hit a certain amount of winners to hit that challenge, and once you hit it, you don't want to go backwards. I completely understand having rules to shut down after a hot day or after a cold day. But the difference between this and the mental stuff I spoke about earlier, where the mental stuff is like judging yourself as the day goes on, I mean, you're trading, you're like, oh man, I'm not feeling too great, maybe I should shut down. This shutdown should be predetermined. So it should be in your trading plan. If I lose this many trades in a row, shut down. If I lose this percentage, my maximum drawdown, maximum allowable drawdown for the day, then I shut down. If I reach this percentage of returns on a day, then I shut down, right? That is predetermined, and that's rules-based, and that's more part of your trading plan versus an on-the-fly decision. So it's a little bit different. All right, so now here's the part that I teased in the beginning, right? Here are some questions that you need to ask yourself before deciding if you want to become a scalper or not. And I would say this: if you answer no to any of these questions, you should not scalp. So the first question is this: do you need excitement to stay engaged? Probably shouldn't have done that. That was weird, and it's going to show up in a short somewhere. All right. Yes or no? 2, do you feel like you need to be right all the time? Ego. 3, do you trade mostly because you enjoy action? 4, do your emotions from previous trades stick with you into future trades? 5, do you struggle with restraint or discipline? 6, do you want to scalp because it just sounds cool, right? If you answered yes to any of those questions, I think I said no earlier, but if you answered yes to any of those questions, scalping probably isn't for you. Now, let's talk about the hidden costs of scalping, right? And some things that you need to consider. To be a successful scalper, you usually need to win at a very high win rate. So you have to be a high percentage trader. Now, that's something that a lot of traders want to do, and the internet tells you can do, but it's a lot harder in practical application than it is in your mind when you start designing all these ways that you're going to become a millionaire through trading. And the reason you have to win at such a high win percentage is not just because you're covering for your losses, but you're also covering for trading commissions and or spreads. And trust me, brokers love scalpers because they get paid every time you trade. I remember earlier on in my trading career, I made this mistake. This is back in the stock market. I was trading penny stocks, right? I started off as a stock investor. I didn't have a lot of money. I was actually really good at investing, but I kept moving money around because I'd have money tied up and I'd see like this other opportunity and I had to take it out. But what happened was I was making money, but I wasn't making money as fast as I thought I would be making money. So I learned about something called penny stocks. I believe it was Timothy Sykes. I was watching this show called Wall Street Warriors. It was Timothy Sykes. He was trading in his dorm room with penny stocks, and the frequency, the action was all there. And I'm like, ooh, yeah, I want that. So I went to penny stocks, breaking my cardinal rule, right? My cardinal rule in investing was don't invest in anything you don't know. I knew nothing about these penny stocks, but ego had gotten to me, a little bit of money had gotten to me, and I got duped into doing it. Anyway, I was trying to trade these penny stocks. I had no idea what I was actually doing. I didn't even know what a price chart was aside from like the line chart, but I was trying to trade these penny stocks and I was in, I was out, I was in, I was out, I was in, I was out. So then I was looking at my P&L at the end of the deal, and my P&L wasn't that bad, but my commissions outweighed my profits. And I'm like, what the hell, man? Like all that work for nothing, just to lose money for stuff that didn't actually lose money. It was weird. I felt good about being good, but I was good, but didn't make money. Anyway, lesson learned. So just something you need to consider if you are considering scalping. Definitely take those aspects into account, and that will be different depending on what type of brokerage account you have, and if you simply pay spreads where you're paying money based on the chart before you get into a trade, or if you're paying commissions where it's a set amount each time you do trade, either a round trip in and out or just one or the other. Now, final thought, and this would be another advice but not advice if you're going to be a scalper. Because of that reason, the high frequency of it and the need of attention, I think if you're going to scalp and be a manual scalper, I should say, it's going to be extremely difficult. So I would advise, if you're someone that knows how to build systems or create automated things, that's probably going to be your best way, right? Develop an automated strategy. That way it can ping you in, it can ping you out. The orders are going to be a lot quicker because you don't have to go to your mouse, click it, do that, and have the market run away without you. That would probably be the best way to be a high frequency trader. Now, before I end you, that sounded bad, like I'm going to kill you. I'm not going to kill you. No, I promise. I need your help to grow the show. I wouldn't do that. Before I end this episode, I do want to visit the poll. And if you guys go over to the YouTube community, I'd love for you to interact with the poll as well. It's very young, but the question was, what are your thoughts on scalping? Scam, not a scam, but very difficult. No more difficult than any other trading style, or I don't know what scalping is. And so far, only 3 hours in, 88% said not a scam, but very difficult. 0% said scam, and 13% said more difficult than other styles. But when I edit this video, I'll put up an updated version of that. So again, I don't want to discourage you. The goal of this episode was to educate you and give you a few things to think about so you can make an educated decision before deciding whether you want to be a scalper or not. I know a lot of people make it seem fun and exciting, but a lot of newer traders don't know what actually goes down. As always, Trading Coach Podcast community, YouTube community, one of the same, right? I would love to hear your thoughts, right? Again, you can answer that poll question, you can comment below. Do you think that scalping is a legitimate style of trading? Is it too difficult? Should newer traders try it? Should only seasoned vets try it? Do you have experiences that told you stay far away from this, or hey, you can do this and here's what helped me? Either way, share with the community, and that way you can also play a cool role in educating our future traders. All right, hope you enjoyed the episode. Until next time, plan your trade, trade your plan. Hit that like button, follow on your favorite podcasting app, leave a rating and a review if you haven't done so already, and I'm going to get some coffee. See you.